You know, just as long as I've been making videos here on this platform, YouTube, what I see a lot of, especially even within the Discord community here, is that people continuously state, I'm blowing my accounts, I'm blowing my accounts. What can I do? Today, I'm going to show you a way to prevent yourself from actually blowing your trading account if you just simply follow proper risk management procedures, okay, or processes. All right, it's pretty simple, but you have to really understand what's really going on overall and the best areas or zones to trade from. So first and foremost, I trade on range-based charts, and it doesn't matter if you trade time-based or time charts or volume or tick. The strategy in which I'm going to show you, using an example from yesterday's trading session on a beautiful short opportunity right near the closing around 3 o'clock, I'm going to show you, give you the rundown of the strategy, okay? All right, I'm not going to go like in great detail, but just going to give a quick synopsis of it. But what I want to show you is how to practice proper risk management to prevent yourself or protect yourself from blowing your trading account. So let's talk about this. What I want to do first is we're going to take a look at the higher base, okay? I'm not going to say time frame because I don't trade time-based charts, but the higher base chart, which I solely use to mark my levels or zones, and particularly supply and demand, because that's how I trade 98% or more of the time when I'm looking for trading during the session. Now, in this example here, we're looking at my higher base, my 60 range chart. You can see here. You have to see what's going on when it comes to market structure. And I want to stress this right now, and I stress this in about every video, and those that have been following the channel already know that market structure is the key to and the recipe to your success. Think about this. If you are having a hard time reading a book and you can't comprehend the material, how are you going to be able to respond to questions or answer questions if someone asks you, hey, what happened in this particular chapter here during the storyline? You're not going to be able to. The same thing when we're looking here at our charts and we look at the charts and we're trying to figure out which way is the market moving right now, because I need to take or look for opportunities or be able to at least mark zones in which I can take my trades from. Well, take a look here. It's simple. You should be able to identify this, and I did a video on this just yesterday, within a matter of 5 minutes or less, how to trade, which direction. As you can see here, we're breaking what? Structure to the downside. So think, logically speaking, if we're breaking structure, even on a short-term trend to the downside, you should be doing what? Looking for shorts. Now, I'm not saying that there's not opportunity to look for longs, because yesterday I did speak. If we look further out on the bigger picture, as far as the big swings on a higher base chart, we can see that the market did not break any significant area of structure, okay, meaning a major low to the downside. So, we could still be on a higher base chart moving to the upside, but on a lower base chart, we could be starting to have a short-term downtrend. In this case, we are right now. And there's still opportunity to look for shorts as well. So this is the short-term downtrend off of a bigger picture, bullish bias. So right now you can have a short-term downtrend bias and looking for shorts based on this channel right here, which I'm going to draw quickly because I want to get over and talk about the example I'm going to show you. So I'm just using a basic trend channel. I don't trade using trend lines. I'm just showing you the market moving in the channel, so you can just kind of see with your eyes from highs to lows, which way is the market really moving to the downside. But yesterday, and even into, let's say that the beginning of yesterday's, let's say, I believe it was Wednesday session moving into Thursday, because today's Friday and the markets are closed today. You can see we've been moving sideways since the opening of the market at 6 p.m. Eastern time, Wednesday evening. Okay, it's been moving sideways since into yesterday's trading session. But still, we are in a bearish short-term down cycle or trend. So let's get rid of this and talk about the setup. As well, the main topic today is how to protect yourself, practicing proper risk management. Where do I put my stop at, or where should I potentially put my stop at? So in the event to limit the amount of drawdown, okay, or amount of money that I'm going to lose, okay, just point blank, okay. You have to know where to put that stop at. You have to know prior to where to get into a trade where you need to get out at just as well. These are critical things that you must be able to identify very quickly before taking a trade, before entering a trade. You don't want to have to figure these things out after the fact. You should already know. I talk about supporting swings and supporting areas, and those are good stop placements to where to put your stop loss at in the event that the market does come back against you. Now, I want to show you an example here, and we're going to talk about where to put the stop at so that we can prevent major amounts or losing major amounts of money. Take a look. The market starts to move back to the upside, but still, again, think logically speaking what's going on here. We are in a short-term downtrend. Now, there was opportunity if you pay close attention, even into yesterday's trading session. There could have been a long right here, but we're going to focus on this short opportunity. Why is this a short opportunity? Ask yourself for one. Well, we were moving, breaking structure to the upside, but at any given point, you have to understand, even on a lower base chart, the market could shift to the downside, and you can look for a scalp going short. In which right here, we broke structure to the downside and we took out these lows right here. We ran an area of liquidity right here, all right? But we also broke structure to the downside, as you can see right here in this example. So pay close attention. If we made a low here, pull back and broke structure lower, this is an area of aggressive selling. I talk about as part of the strategy, what helps me identify a good high probability area to trade from. We have an aggressive area in this example here of supply. Supply means aggressive selling for all of those that don't or are in the process of understanding or learning about supply and demand. Which you can, if you spend time watching the videos here, and I know you're probably saying, Mike, there's 700 and some videos here on the channel. Yeah. I make a lot of video content because I want to, I'm pushing out the effort or putting in the effort because I want to see people become inspired to trading if they are really passionate and have their hearts involved into it. Okay. All right. So take a look here. We are breaking structure to the downside. If the market pulls back to this area here where we have aggressive selling, one of the key things I love to see always is where there's a gap, okay, or there's a space, if you want to think, or void back up to the zone here where basically where an imbalanced area has not been filled back into, meaning that the market pulled away from it real quick to the downside or pushed away from it and didn't immediately come back to the supply zone. In this case here, that's one of the things that helps me identify, is this low probability or high probability? In this case here, this is high probability. It did not immediately come back to it. So I have a beautiful area or zone that I've marked on my chart before, you know, the market even comes back to it. I do it ahead of time and I wait patiently. That is a very important, critical piece to the puzzle when it comes to trading. Patience, okay? The more patience you have, the more consistent you are in trading as well, and the more profitable you're going to be. But you have to also be able to protect that capital, protect your trading account. Understand? So when the market is running lower here, we see a beautiful aggressive area of selling. So mark the zone right here. Wait off the higher base chart. Wait for it to come back to that supply area. And when it does, that's the remaining part of the strategy, which I talk about all the time here in this channel, but I really go in detail about trade setups and breakdowns. To all those that are interested, people always ask me, how can I become an elite member for the $6.99 price tag a month? All you have to do is scroll down into the description portion of the video. You'll see a link right under the Discord link. And by the way, if you're interested in joining the Discord, okay, there's a link down in the description. The Discord is free. To become an elite member for $6.99, there's a link right below that says become an elite member. Click on it. You'll see 2 tiers pop up. Make sure you choose the one that says elite channel supporter for $6.99. And then you'll have access to the the private community where you get the trade breakdowns. Those are just where I go in great detail about the trades that I've taken, to walk you through the process or my mindset of what I was looking at prior to taking a trade, walking you through why I took that trade, talking about stop loss, where I put, you know, things like stop losses and profit targets. Okay, just kind of giving you an idea, using the strategy, running you through that, and showing you examples of trades. Okay, and lots of those trades I've taken, they're over on the Discord community. So where I've taken a screenshot, posted a trade, I went back to the private community for those that are elite members and broken things down. That's one of the perks and rewards that if you become an elite member, you receive the trade breakdowns as the video playlist as well. But okay, moving on. We're pulling back here to this zone right here. I'll mark it up. Now we're going to move down to a lower time frame. We're going to just roughly or quickly go through the trade setup or whatever the case is. But I want to show you where to place your stop at, or at least where I do, to protect myself from an event from getting stopped out. All right. So let's move down now. Now, as you can see here, I am in my what? I'm in or on my 12 range, my lower base chart. This is where the remaining portion of the strategy unfolds, where the magic really happens at. Okay, this is what really helps me get into more of a precise entry point to where I'm protecting my capital. I understand that. So where I move down to my lower base chart at 12 range, I'm looking for basically a breaker structure. All right, that's all I'm looking for, and a pullback where there's a demand zone, excuse me, not demand, supply zone, because we're talking about supply because we're going short. So what I have identified here, as you can see here, we get a break, a structure to the downside. Right here, we broke below this area here at 490, let's say 495. All right. There is a beautiful area of supply resting right here. But be mindful just as well, if we have a break here at 495, and this is a supply area here, this is supply up here as well. Both of these were areas where the selling started. Well, this is the area actually where the selling started at. And this is an aiding swing that also where more selling took place at before it broke this area of structure 495. So be careful when the market pulls back to certain zones. I'm not saying it can't reject here, which it did, but look, these are areas. If you see an area that has not been tested, where it's still you know, an area where they're above it, basically where there is a gap at, where it has not, not been tested. You have to think logically speaking. Okay, let me see. Will they test this area and reject, or is there more higher probability that they'll also test this area? Now, sometimes they will just test this area here and move away from the zone. But if we are at a beautiful supply setup right here, off of a higher base chart, and we're looking for rejection right here in the zone, you have to think, okay, if there's also a gap back up here, they may try to test this area here and then fake traders out to push back up to test this area here. So I would wait more patiently and look forward to take the trade back up to this area right here. Again, if there are multiple supply areas after that aided in the breaker structure here, let's say there was one here, here, and then here, I would be waiting more so to take the trade back at this area here, because this is where the selling started at. I always talk about that in videos. Try to take your trade, because lots of times they'll want to test every bit and fill in any areas of imbalance back up to an area where the selling took place at in this example here. So this would be the supply area in which I would mark right here and wait patient for the market to come back to. They did reject here, but this was a fake out. What they did was they entertained the idea of getting sellers, people to start selling right here. And then they took people out, ran their stops, and then took their money, grabbed liquidity to push back up here and to continue on with the move to the downside. That's the frustrating piece that a lot of traders can't quite understand. And this is the reason why they get stopped out and end up becoming liquidity in this whole business or game of trading, in a sense, because you have to think logically speaking. This is where the selling started at. Yeah, there's some selling right here, but if they started right here originally, I would think more on a high probability stance that they may or are going to come up here and then test this area. So I'm going to wait patiently for them to come here. So they come here, all right, okay, and then all I'm doing now is looking for a break and close of the last bullish candle to the upside. They tapped the zone right here where the selling started at. They tapped it. Then you wait for the break and close of the last up a bullish candle right here. Break and close is right here with this bearish candle at 504. You take it back down to the downside. Now, the biggest, idea or the purpose of the topic of this video was to talk about where to put your stop loss to prevent yourself or protect yourself from blowing your account. Well, wherever the pullback rested at or stopped at, back at the zone where you got the rejection, meaning the confirmation to go short, where we had the break and close of the candle here below 504, put it back on the back end where the rejection started at, right here at 509.5. But give yourself a few ticks, maybe a few points room there, because sometimes, I'm sure you've seen this, where they're, even on this case right here, look what they did. They pushed down to come back, right? And you're like, okay, I'm getting a little bit scared because they may come back up here. Look, they stopped right here at 508. 509.5 was just basically 6 ticks away from the top of this area right here, where this high was, where you would have gotten to the trade at. All right, because this is where the rejection took place at. They come back here, you jump out of a trade. All right. Or maybe they push the market a little bit higher and they run it tick to tick, or just buy a tick or two and swipe the high right here. They do that a lot of time because they know people or traders are putting in their stops right here tick to tick. Give yourself a couple ticks, 6, 8 ticks, breathing room, a couple points, whatever the case is, and you'll see that you'll come out on the better end. So instead of putting my stop loss tick to tick at the back end right here, I would position it, a few ticks above that, just in case they come back up here and wick right above the area right here. Didn't stop me out, and then they run lower. How much lower did they go? A lot lower. You see that they flushed the market after doing that. So this is a beautiful setup right here. So you have to be able to see things just as I'm speaking here and know where to put your stop to protect your capital so you don't get stopped out, because lots of people always see, traders always say, man, it ran my stop and then it went in my direction, because you have to understand what's going on. All right. We as retail traders, we don't have any control of the market. It's the banks and institutions, and they know where traders are. They think we're not as smart as them. So we have to think and be like them and understand their movement and see the footprints in which they're making and trade accordingly. Let's say you got into this trade right here. I know, because people are probably going to ask, well, what if I did take this trade right here? Because it was, this was a supply area. Okay, so you got the trade right here. But you have to think logically speaking as well. If I got into this trade right here and I wait for a break and close of a candle to the downside at 497, say for example, or maybe you got in here after the first bearish candle, the second one breaks below 499. Look how much further it goes. Maybe 4, 5 points at max, maybe 4.5 points. Before they turn back around, let's say 5 points, before they turn back around to stop you out. And people get frustrated, even in situations like this. Well, what happened here? What happened here was there was another supply zone where the original selling took place. Understand that. It makes more sense for them to come up here and fill this area in as well, because there's an imbalance back to the upside here. They're going to fill that area in to close in all the gaps back up. They have to close the gaps. Okay, they have to do that. At some point, all gaps will be closed. In this case here, they saw opportunity. Oh, there's a gap right here. We got to fill that in. We started selling right here. That's the way the banks and institutions think. We started selling right here. So we need to go up there. If there's some more orders that we still need to fill, or, then we're going to go back up there, fill the gaps here, fill the rest of the orders to keep the market going to the downside. Because the higher base chart is showing you're at a major supply area where it could test back down here to the lows. So think more logically. Will they stop here or push lower, or does it make more sense for them to come back up here? If you got into the trade right here, you'll be saying, okay, where do I put my stop at? You're going to put it right above here at 503 and above by maybe say 6 to 8 ticks right here. But in this event here, maybe you did pick up 4 or 5 points here, and then you got scared out because they started pulling the market back and you got out. Or maybe you picked up a few points and then they stopped you out. Okay, you see what they did? You see what they did right here? They pulled the market back tick to tick right here. Yep, okay. And then they pushed the market back down and you stayed in your trade, and then they stopped you out. Because you have to understand what took place right here. Right here is that this was not the final stopping place for them to really start making their move at. It was back up here, because back up here, it tapped back into the 60 range or higher base zone. This was the zone. You see this right here? Look, pay attention. This area right here was not inside the zone, the higher base zone. This area right here was, see? As we pull back where this supply zone was resting right here, we pull them back into the zone as well on the higher base chart. So they filled in every bit of those gaps there, and then they ran the market lower. How low? Take a look here. You got into the trade up in this area right here. Again, let's say you got into the trade right here, the breaking the candle at 504. Look what happened. From 504 in this area right here, the market ran all the way lower down to 447. 447. That's more than 50 points right there. Think about it. Okay, so you have to understand what's going on here. This is a beautiful trade setup that took place around 304, 305 yesterday afternoon. And if you took this, so this is a way to help prevent and protect yourself. Now, let's say you got into the trade. All right, let's use this as an example right here. You got into this supplies trade right here, and it went short. You're saying, well, what would I have done? How, at what point? I talk about this on, in videos. Typically, when I see two bullish candles, if we're in a, looking for a supply setup, and then I see two bullish candles close to the upside, strong bullish candle to the upside, and the second one closes, another strong bullish candle to the upside, then I'll get out the trade, because, it's definitely a sign that they could be wanting to push higher at that point there, especially when they start closing above bearish candles to the downside right here. When they start closing above these bearish candles where the market rejected it right here, and then it turns back and we start breaking above those bearish candles, and if your stop's, like say for an example, resting up here, you may want to go ahead and close the trade out before you start incurring, you know, more loss or more drawdown. Okay, so that's what I talk about as well. In many videos, you know, people always ask, hey, if the market starts to come back against me, what am I looking for? You know, what possible should I do? That's what I typically do, especially, you know, if I'm looking to take a short and then it starts to come back against me and I see multiple, after 2 closes of a bullish candle back to the upside, I'll probably get out the trade to protect my capital more. So that's what I do. So anyways, I just wanted to show you ways to be able to preserve or protect your capital in the event so you don't blow an account. All right, time and time again. But this is all boils down to proper risk management. Okay, taking proper risk management. But I hope this helps somebody else out there, or somebody out there, many traders out there, because I see this discussion, this topic coming about people blowing their accounts. You know, not just once, not twice, multiple times, and then they get frustrated, and it leads to them to stop trading. So if this has helped you out and you're currently a first-time viewer here to the channel, or if you watch some of the videos here on the channel and you love the content, please make sure to subscribe to the channel. Click the sub button. Make sure to turn on all your post notifications so you never miss one of the uploads. And please, last but not least, drop a like on today's video content if you found value in it. Again, if you're interested in becoming a Discord member or an elite member, both links are down in the description portion of this video. I'll see everyone in the next one. Have a great weekend.